Hello, peeps, and welcome to the Trading with SLY 5-day beginner trading bootcamp. That sure is a mouthful, isn't it? Okay, so today being day one, we're going to be laying the foundation, and what we'll be talking about financial markets. Why do prices move? We're going to be talking about candlesticks and time frames. I think that's enough for today, just those four. So, firstly, what is a financial market? Simply put, a financial market is a system or a place where individuals or corporate bodies or even governments go to buy and sell financial assets such as stocks, bonds, currencies, and all what's not, right? So, it's a system or a place where buying and selling take place. So I think that covers that. Now, when we talk about buying and selling, we are interested in price, and in the process of buying, we always want to buy at a low price, and we want to sell. If we're involved in selling, we want to sell at a high price, right? And that is kind of what influences the movement of price. Now, the question, why does price move? The simple answer is that price moves because of the imbalance that exists between buyers and sellers. You know, in a market brings buyers and sellers together. A simple illustration would be like, okay, imagine if I had an item, just one item, and um, people are willing to buy it at say 100 naira, and I myself am willing to sell it at 100 naira. The price, of course, will just remain at 100 naira. But in a situation where I have more than one person bidding for the same item which I want to sell, initially I placed it at 100 naira. Then I have like maybe five people who need that thing. You would see some people will be going out of their ways to get that thing, and in the process, somebody might offer me 101 naira instead of the initial 100 naira which the price was at. Another person in the bid to get that item could offer me higher, say maybe 105 or things like that. The idea is there are more buyers than sellers. Okay, there are more buyers than sellers. So in that case, the price will continue to go up. But if on the other hand, I have maybe we have more sellers of an item, you see people would actually be reluctant to buy at particular prices, and the sellers now would be the ones trying to please the buyers by reducing their prices and making it attractive for people who want to buy. So you see the concept of price movement there. It is just because of the imbalance that exists between buyers and sellers. Okay, so that is why price moves. Now, to a little more core reason why we are here. In our business of trading, whether you're trading forex, whether you're trading synthetic indices or crypto or currency pairs, we make use of what is known as candlesticks, and those candlesticks represent the movement of price with time. Okay, if you can see this screen here, this here measures time, and this here shows us price, right? So the candlesticks on this chart, which I'll be showing you, it moves like that, measuring price in a given time, right? So while price is moving, and we're getting the information of what price is doing, that is, it is being shown on candlesticks. This um let's see, these are examples of candlesticks. These are examples of candlesticks. These red and green bars that you can see, it depicts the movement of price upward and downward. And we already know why these prices are moving, because there are buyers and there are sellers in the market, and there's an imbalance that exists between them. Right. So moving forward, we have seen candlesticks. These candlesticks now are presented to us on different time frame. For instance, what we're looking at right now is the 1 minute time frame. You can see that right here, the 1 minute time frame. Sorry about that. Let me draw it again. The 1 minute M1. It shows that the candlesticks you're seeing are on a 1 minute time frame. What does that mean? It simply means that each of these candlesticks represent price action for 1 whole minute, which means it takes 1 minute for each of these candles to form. It takes 1 minute for this candle to form. It took 1 minute for this candle to form. Same applies to this, and so on and so forth. All of these candles were formed within 1 minute. Now, there are also other time frames that exist. We have the 3 minutes time frame, we have the 5 minutes, the 30 minutes, the 1 hour, the daily candle time frame, the weekly time frame, the monthly time frame. It simply means that each of those candles, let's look at the daily time frame for instance, each of these candles are formed within a period of 1 day. It takes 1 full day for a daily time frame candlestick to form. So you can see these candles that have formed before now, this, and so on and so forth. It moves from the left hand side to the right hand side. Of course, the way we read, the normal way we would read anything. So the current candle, this red small candle here that is forming, is today's candle. And by the end of today, that candle will close and another one will start forming. So that is that about time frames and candlesticks. Now there are different types of candlesticks, like we can see the red ones and we can see the green ones. The red ones are known as bearish candles because they are showing us price moving downward, while the green ones are called bullish candles. They are called bullish candles because they are showing us price moving upward, right? They're showing us price moving upward. Bearish and bullish. Okay, so for your assignment, I'm going to ask you now. I'll need you to open a chart. Okay, before you be able to open a chart, you all need to download the MetaTrader 5 app on your Play Store app. Go to your Play Store app and type MetaTrader 5, or just type MT5 and download it. Then open it and identify for me 10 bullish candles and 10 bearish candles. Submit them to me in my DM. All right, guys. I hope this information has been useful to you guys. Feel free to make use of it however you wish. I am SLY, and I'll see you in the next video.